In the last video, we talked about how business owners can go from $90,000 of income to save $1 million in retirement in about 25 years or so. We've had to make some assumptions, obviously, because we don't know what the future will hold. But one of the questions remains unanswered. And in today's video, I would like to answer that question. And the question is, what is the take home difference between the four different case scenarios that we ran? Welcome to another episode of Elephant Corner Financial Lab. My name is Nev Kraguljevic. I'm a financial planner, and let's get going. So, this is where we were left with the last time we did the video. This is basically what we had. And let me zoom in a little bit so you can actually see it. We had a case scenario of a single business owner earning $90,000 of income with student loans, health insurance, retirement planning, and trying to optimize things. And we had four different case scenarios where they were basically taking income in different stages, in different levels, and working on different optimization. So let's take a look at what the take home was. So, take home. And this take home is going to be after all of the different expenses were paid. So this is the income that they will receive, that they will have at the end of each month, depending on the structure. So in first case scenario, they first basically pay the taxes, then they have a take home that they pay basically the health plan, they pay for the student loan repayment, and they are left with $4,159 each month. Now, after that, they would have to save for retirement because in this case scenario, we did not have retirement whatsoever. In the second scenario, where they basically reduce the taxes, we're able to see higher take home income of $4,354 per month. Now, that's about $200 higher, and really the only thing that paid into that is how they structure the pay, the W-2 versus the profit. And the savings really came from the FICA tax, the reduction on the FICA tax on the amount that wasn't taxed through that. Now, on the third one that we tried, we were deferring money over to the simple IRA. We reduced the income overall was now 73,000 only because we were putting $12,000 towards the simple, and they were left with $3,571. Now, clearly, we lost about $1,000, a little bit less than that, but let's say $1,000 between the scenario 2 and scenario 3. And really, that 1,000 was going to that 12,000 into the simple, into the retirement. Where it gets really interesting is in our case scenario number 4. Now, if you recall, we reduced taxes. We went from 20,000 to 11,000. Our AGI went from $88,427 to $59,340, and we were saving $23,300 every single year. The interesting piece, especially when we optimize for the student loan repayment, which was reduced greatly, is that their take home was $3,714. As you will see, there's a difference from number 3 and number 4 where we are making actually $200 more, a little bit less than that, but roughly about $150, $200 more in the take home pay between the two scenarios, whereas we were saving almost twice as much. And really, the savings came from the taxes, the health plan, and then the student loans. Now, I do want to point one piece out because if you've been paying attention, you are looking at this $4,354 a month and $3,714 and are saying, whoa, that's a big difference. you will notice that there's a difference of about $640 each single month, or roughly $7,680 per year. So you are left with, let's say, $7,700 left. But I do want to point one piece out. And that one piece is that you are taking the $7,700 less by actually saving almost, well, $23,300, not almost, exactly that. So the question then comes, yes, you're taking a little bit less in income after the expenses with optimization. However, you are saving $23,000. So then the question comes, would you be willing, and does it make logically sense to not get 7,000 to be able to save 23,000? And that's almost 3 times as much. So to me, it's a no-brainer. But again, everybody has different lifestyle and expenses and what they can and cannot afford. So I wanted to answer this because it was a question left unanswered, and I can't answer for you whether this is worth it to you or not, but I can tell you that these are some of the strategies we can do and utilize. I hope this was helpful. I hope you have learned something new. If that is the case, please like, subscribe, and tell others about it. Until next time, stay money blessed.